Hello and welcome everyone to this educational presentation. Now today I'd like to talk to you about your search for a great trading technique ends here. I know that most of us, especially when we're first starting out to trade, are looking for that holy grail, that technique that will solve all our problems and make us rich and have us retire in about a year, right? Unfortunately, that pretty much doesn't exist, but there are some great techniques that can really elevate your trading. Excuse me. And I'm going to be talking about that today. Now, I think one of the biggest problems why the search is so difficult for finding these great techniques is because we're taught to follow the wrong things. For example, let's look at this chart here in AMEH, okay, Apollo Medical Holdings. Now, let's say you were interested in buying this. Let's say you've done your research, you like the company, maybe somebody down the street from where you live is touting it, whatever the reasons, you like this, but as you can see, you feel you may have missed it. After all, it went up pretty quickly and maybe you're starting to think it's overbought. Then on top of that, a day later, what happens? It starts to sell off. And remember that $5,000 class you took on the candlesticks? Well, it says this is a bearish engulfing pattern. So this is extremely negative. So we've most likely hit the top of an uptrend and it's going to come down. So you say to yourself, you know what? I'll wait till it comes down to the lower lows here, and then I'll think about buying it. You still like it, but the market is giving you all the signs that it wants to go lower. So you decide to hold off and wait, and then this happens, right? This is the main reason why most traders are faulty and they have, losing months and losing years is because you're taught to follow the wrong things. Well, here's the good news. In today's educational presentation, I'm going to share with you the rules to a great trading technique that actually would have generated a buy signal right there. Where you thought there was a bearish engulfing pattern, that was actually a buy signal. And potentially you could have captured upwards of 75 points. Here's the good news. If you happen to miss that signal, there was another one generated right here, and then another one generated right there. Okay. Now, if following chart patterns and listening to the market is something that you've never done before, we make it simple on our platform, the PTS Primo charting platform. I developed this and designed this with proprietary strategies with one goal, and that's to teach traders how to trade. So you'll see this attention to detail into educating traders in today's educational presentation. So welcome once again. My name is Steven Primo. I'm the president and founder of Specialist Trading. I teamed up with proprietary strategies about a dozen years ago with one goal in mind, and that once again is simply to educate traders. That's the main thing that's missing in most traders' trading plans. I mean, most traders, if you ask them if you have a strategy, they say sure. If you have someone to go to listen to a chat or to a trading room, they go sure. Or a blog to read, or maybe they have a favorite guru that they listen to tell them what to buy or sell. But the one thing that's missing is education. That basically traders take themselves out of the game. They don't want to make their own trading decisions, so they rely on someone or something else to make the decisions for them. Think of it. Do some soul searching and ask yourself, is this the way you make your own trading decisions? Do you read a blog, a nightly blog, or in the morning before you start the trading day? Or do you go to a signal service? Or do you listen and wait for the economic reports to come out? I did the same thing when I first started trading 44 years ago, and I couldn't make a dime trading that way. I mean, we were all taught to trade that way, right? Look at the earnings, look at the fundamental news, economic indicators, see what the support and resistance is, look at the moving average and the volume. But trust me, it didn't work. There was no consistency in using those things. So I was lucky enough to have some mentors that changed my way of trading and taught me how to listen to the market. And that's what I'm going to share with you today in today's educational presentation. Now, before we begin, as always, we are required first to share this with you. So please take a moment to view our disclaimer. I'm going to show you a lot of performance results using this trading technique, but please remember that we can in no way guarantee that any of the results I'm about to share with you will be repeated in the future. Also, please remember that all examples, since we are an educational company, all examples are strictly for educational purposes only. Now, from time to time, if you'd like to get some more education, I invite each and every one of you to follow us on Twitter. There's our handle right there. I would suggest copying that down because I post different educational information on a daily basis. Sometimes I post signals that our strategies have generated, and I give a little bit of information as to why they were generated. And I also post little bits of financial wisdom to help you trade along your way. So there's lots of great free educational information on a daily basis. So please feel free to follow us on Twitter. Now remember, we're different from other websites and other webinars you may have attended, in that we're not going to tell you what we think the market's going to do. We're not going to tell you what we think the perfect stock is to buy or what the perfect stock is to sell, or we're not going to tell you what the perfect time frame is. Why? Because once again, that would be taking you out of the game. That would be taking away your power and asking you to blindly follow along with whatever we see. And that's the reason why most traders fail. You're taking yourself out of the game. We do the opposite. We give you the information, the strategies, and the techniques you need to make your own trading decisions. And we work with you as educators. We're with you every step of the way so that ultimately you can make your own trading decisions. Once again, my goal as an educator is not to force feed you signals or trade for you, but a good mentor teaches you how to trade. Now, the specialist edge is what I was taught some 44 years ago and what has sustained me. And that's what I teach to all of my students around the world in over 115 countries and every state in the United States. The specialist edge is rooted in simplicity, and it's mainly teaching you how to listen to the chart in front of you. It's so much simpler than trying to figure out what the earnings mean, trying to figure out, well, there's inflation, so that must be bad, or that must be good for the market, or figuring out what the economic indicators are. The best thing is just to listen to the market in front of you. It's a lot easier to understand. It's much more cut and dry, and it's not so subjective, okay? Now, once again, we are new to Zoom. We just started this last week. So I just want to make sure that you're all seeing and hearing me clearly. If you can, please go to your chat box. Just go to the drop-down menu and just type in yes or no if you can see or hear everything clearly. I would hate to go through this entire presentation without you hearing one word of it or seeing the charts I'm going to be sharing with you. So if I could just see that right now, once again, a show of hands by just typing Y or N or yes or no. That way I know that I'm coming through loud and clear. Remember, this is an educational presentation. We are going to record this, but I still want to make sure that you can see and hear everything clearly. Okay, well, looks like everything's okay. I'm getting some, not a lot, but some. I guess it's all right then, right? Okay, I'll have to take that for a yes, if you can see and hear everything clearly. All right, with that stated then, let's see, everything's okay, great. Okay, thank you so much. With that stated, let's begin today's educational presentation. And I want to start out by a theme of today's presentation. And I like to, do this periodically with my webinars because there is a theme behind today's class. And that is the secret to consistency is simply to want what the market wants. I mean, that's really it, right? If you lose money, if you buy and the market goes up, or if you, I should say down, and if you sell and the market goes up, it's basically you're out of sync and you're not wanting to do what the market wants to do. It's as easy as that. It doesn't have to be more complicated. It isn't because the earnings are out of whack. It isn't because there was a buy program. It isn't because of what somebody did on some blog. It's simply because you're not wanting what the market wants to do. Now, here's the only trouble. Most of us think they know what the market wants to do. As, for example, we look at this older chart of Zion here. It's obvious someone would say, well, Steve, the market wants to go down. So that means I'm either going to be a seller or I'm going to stay on the sidelines. And just when you think you figured out what the market wants to do, it changes direction, right? So it's difficult. What we need is not to rely on some moving average crossover, not to rely on some economic indicator, but to rely on a translator. What if somebody could translate us, okay? What if somebody could tell us exactly, what the market was doing? So in order to trade in sync with what the market wants, you need a tool that translates what the market wants. It's that simple. We just simply need a tool that tells us what it wants to do. Remember, we're not listening to anything other than the chart in front of us. But what is that tool? Well, it's the PET-D. You heard about me speak about it before. It's probably one of our most popular trend trading tools at Specialist Trading. But for those of you who aren't familiar with what the PET-D is, let me share with you some of its highlights. Firstly, it's a proprietary algorithm. We're keeping the calculation in-house. Why? Because it's kind of complicated. And I don't want you to sit there and have to do what I did some 4 decades ago and have a hand calculator and calculate this, this formula on a tick-by-tick basis. It would be very difficult. So what you want to do is just learn how to apply it. And what we've done is we've developed it into a color bar algorithm. So this means if you have an uptrend, the bars will be green. A series of red bars means the trend will be down. It's that simple. Now, one of the easiest ways to apply it is as a signal confirmation tool. This is a highly popular way among our students. You can apply any strategy. And as long as the bars are green and your strategy generates a buy signal, that's a high probability signal. And vice versa, if it's a sell signal, the bar should be red. But here's what we're going to be talking about today as an early trend detector, because in all my 4 decades of trading plus, this is the best tool I know of that really discerns what the trend is, better than anything I've ever seen, and before, in advance, than any other trend detector. So let's look at this chart again in Zion. All right, remember it went straight down, and just when we thought it was going lower, it goes straight back up. Well, how could the PET D have helped us? All we have to do is simply click on the PET D on our platform, and it automatically, the colors will appear. As you can see, we knew well in advance, because the bars were red, that it wanted to go lower. And even though it's not developed to pick the bottom or to pick the top, we knew well in advance that this was not just a bounce or a pullback before it went lower, but this was signaling and translated that it wanted to go higher. So once you know what the market wants to do, you can virtually apply any strategy, or in this case, any technique that is in sync with that direction. You see, now you're being able to trade with what the market wants to do. You notice none of this is based on fundamental news. None of this is based on the traditional wisdom like candlesticks or candlestick patterns or moving averages or support and resistance. Not at all. It's an algorithm. It's a formula that on a tick by tick basis basically translates what the market wants to do. So today we're going to be talking about a great technique. I personally use this in my own personal trading. I like to trade intraday with E-mini futures, and I use this exact same technique. I'm going to share with you what it is today. All right, so let's look at the buy setups, all right? If we want to go long, what is the setup? Well, firstly, we want to identify 2 bars, and these bars have to be colored green by the PET D. So 2 green bars have to be generated next to each other. So as we see here, let's say we have 2 generic bars, and it makes no difference if this is a 5-minute time frame or a monthly bar. It makes absolutely no difference. This could be translated onto any market, any time frame. And then once you apply the PET D, you want to see that both bar 1 and 2 are colored green. Okay, that's it. Now, here's the second part. After you've identified 2 green bars next to each other, green bar number 2 must close below the low of green bar number 1. So let's look at these bars again. Green bar number 2 must close below the low of bar number 1. So where's the low of bar number 1? Well, it's right there. Okay, we paint this little line across. So look where we closed. We close below bar number 1. So what's that telling us? What is the market telling us? It's a buy setup, that most likely we're going to go higher. That's it. That's your great trading technique. You don't have to search anymore. I use this, like I said, on the E-mini futures. You can use it. I'll show you a ton of different charts today, how simple this is. And these are all recent charts that some were generated this past week. But let's look if you want to go short, because you can use this to go to the downside as well. All right, you want to identify 2 bars that are red. Okay, 2 red bars are generated by the PET D. So once again, we have bar number 1 here, bar number 2 right next to each other. Once we apply the PET D, we want to see that both these bars are red. Now this is an up day, but it's outlined red. So that means that the PET D is still saying that it's a red bar, meaning it's still in a downtrend. It's an up day in a downtrend. All right, so we've identified 2 red bars next to each other. Now, red bar number 2 must close above the high of red bar number 1. Okay, so here's red bar number 2. Let's see where the high was of red bar number 1. Well, it's right here. That's the high. Did we close above it? Yes, we did. Closes above bar number 1. So what is the market telling us? What's our translator translating to us? Well, it's saying that's a sell setup. See how simple trading is? Trading is really simple. It's really simple. It's just the trader, the individual trader, who makes it more complicated than it has to be. Take it from me personally. 44 years ago, when I first started trading, I had maybe 20 indicators on my screen. We didn't have chat rooms or trading rooms then. There was no internet 44 years ago, but we had tons of newsletters and periodicals to read. And I was reading all those. And I was also listening to all the gurus on TV. Okay. And lastly, I was waiting for all the earnings to come out. I was looking at all the economic indicators, jobless claims, money supply, everything, the bond market, what it was doing. And guess what? None of it was making me a consistent trader. My mentors, who were specialists themselves, who've been trading roughly about 85 years between them, said, listen, Steve, if you want to be a consistent trader, get rid of all this noise. Stop looking at this. Stop overcomplicating your trading and learn one thing, how to listen to the market. And that's what I'm going to be sharing with you today with this technique. Okay, so let's look at some recent technique examples. I mean, some of these go back a couple of months. Some will go back a couple of weeks or a couple of days, okay? And remember, everything you're seeing today is coming from snapshots displayed on the PTS Primo charting platform, the educational platform that I developed with proprietary strategies with one goal in mind, to teach traders how to trade. All right, here's an example in PSA, all right? Someone looking at this will say, well, yeah, Steve, it was going up pretty well, but all of a sudden it looks like the uptrend is running out of steam. So, I don't think I want to buy this because look, we've hit some kind of resistance and now we're going lower. So what is the market telling us? Well, we click on the PET D on our platform and we see that all of the bars are colored green. So even though we've been going down for the last 2 or 3 days, this is a buying opportunity. It's not a selling opportunity. Those are down days in a short-term uptrend. So we want to look for that 2-bar pattern, 2 green bars next to each other, and bar number 2 closes below the low of bar number 1. What we see here as we look right here, well, we're closing mostly above. Here we close lower, but we didn't close below. Here we close lower, we didn't close below. But what do we have here? 2 bars. Bar number 1, bar number 2. Here's the low of bar number 1. Did we close below it? We sure did. So that's a buy setup right there. Now, remember, this is not a strategy that tells you exactly where to buy. It doesn't tell you exactly where to sell. It doesn't tell you exactly where to place your stop. It's just highlighting or placing a spotlight on a high probability area, signifying that this most likely is going to go higher. So whether you want to buy it right there, you could buy on the close, you could buy the next day opening, you could put a limit a little lower. It's up to you. But either way, the interest rates, either way, the jobless claims, either way, some guy on TV or some guy in a chat room is not telling you what the market's doing. The market is telling you it wants to go higher. And look what happened coming into the end of July last month, up 25 points. And once again, if the trend is strong enough, it will continue to generate these buy signals all along the way. All right, you see right here, we had a close, bar number 2 closed below the low. That was another buy you could have bought here. And then another one right here coming into August. All right, let's look at this example now. This is in CCL. Someone looking at this would say, well, Steve, I took that $10,000 class on candlesticks, and right here, this is a classic morning star pattern. That's very bullish, okay? It's a 3-bar pattern. That's a morning star. You got to buy this. Okay, well, what is the market telling us? The market, once we apply the PET D, has all of the bars red. So it's saying that we're in a short-term downtrend. So I don't want to buy anything that goes against the market. Remember, the suggestion of the day or the theme of the day is to want what the market wants. So if the market wants to go lower by coloring these bars red, I don't want to be a buyer, right? So I'm not going to take that bait of that morning star. But what do I have here? If I look for that 2-bar pattern, I see we have bar number 1 and bar number 2. Now, if I take the high of bar number 1 right there, I see that bar number 2 just barely closed above. So what is that telling me? Telling me that that's a sell setup. I could either sell on the close, sell the opening the next day, place a limit higher or lower. It's up to you. But whatever you want to do, the market is not telling you it wants to go up. It's placed some structure on this right now telling you it wants to go lower. And look what happened. 10 points coming into the middle to end of July there. Now, if you missed that one, there was another setup right there, and then still another setup right here. All right, let's look at PayPal. Once again, it looks like the market's kind of rolling over. It doesn't look like there's a lot more gas left in the tank to the upside. But if we apply the PET D, we see that all the bars are still green. Now remember, all the bars don't have to be green. We only want the 2 bars in that 2-bar pattern. That's all that's required. But this is a good sign telling you that the market in no way is telling us it wants to go lower. We look for that pattern. We actually have 2 of them right here, one right here, and then another one right here. This was in the beginning of June, coming into the middle to end of July. Stock was up 50 points. What happened to the stock rolling over? Now look what we have here. Bar number one, bar number two closed lower than the low. There's a buy. There's another one. We had 1, 2, 3, 4 more chances to get back in. All right. A lot of our students come to us say, well, Steve, I took this class on the institutions, and basically the institutions are supposed to do no wrong. I spent about 10 or 15 grand there, but it didn't seem to work that well. And I say, well, I'm not going to put down anyone else's class, but I personally traded with the institutions when I was on the trading floor, and they had the worst track record of anyone I've ever traded with. So I would never put my trust in the institutions, even though they have a lot of money behind them. That's the reason why they can fail so much, because they have enough bucks to come back and trade again. Or most personal traders are not like that. And if you have a big loss, you can't come back again. So that's why people think the institutions are so powerful, when it's been my experience that they're really not at all. But most traders would say, well, Steve, there's major support here. This is where the institutions want to buy. And that's basing your decision off of someone or something else. But what is the market telling you? Well, it's telling us that even though we've been going sideways, and even though it looks like there's support, it wants to go lower. Just hasn't done it yet, but you shouldn't buy anything. And if you apply this 2-bar technique I taught you, well, you had 3 examples, 3 chances to get short, basically roughly around the same price. Ultimately, it kicked in just about a month ago, and all of a sudden the stock fell out of bed 25 points in just a couple of days. So what happened to the support? What happened to all the institutions buying there? Okay. Remember, if you stop listening to outside sources, stop taking yourself out of the game and learn to listen to the market, you'll get onto that road to consistency much quicker. All right, let's look at AMC. Let's go back a while. This is an older chart, but I wanted to show you this example because there's so many students that when AMC and Bed Bath & Beyond and all these other stocks that were taking off about 3 months ago, they'd say, gosh, I never get a chance to get involved in those big ones. I heard about all these guys that were millionaires overnight or made tens, if not hundreds of thousands of dollars overnight because some blog was writing about, we've got to buy this. And I never get, I never see these things. My strategy didn't generate a buy signal, so I didn't have any idea. And traders love to play that victim game. They always want to play oh, why me? How come I miss all the great moves? Okay. Well, let's look at AMC before that big move happened. This was back in May. If we apply the PET D, we see that originally all the bars were red, telling us that it wanted to go lower. All right. Not the institutions, not the fundamentals, but the market. AMC was telling us I want to go lower, but right here, it changed and the colors changed consecutively to green. So right here, we know that we want to be a buyer now. Now we don't know where to buy it. It could be tomorrow, it could be next week. So we have to add some structure, and that structure is that 2-bar pattern I taught you today, this trading technique. And what do we have here? Bar number 1, bar number 2. Bar number 2's close must close below the low of bar number 1, which it did. So on the 19th of May, before anything came out about AMC going to the moon, the market was telling you it wanted to go higher. So see, once you have this technique, you could have potentially made 60 points in 2 weeks. There's no reason to play that victim game and to sulk in the corner and say, how come I never hear about all these great stocks that take off? It's because you're listening to the wrong things. If you would learn how to listen to the market with a translator, you would have had a buy signal generated a full 2 weeks in advance of this big move. All right, let's look at Virgin Galactic's SPCE. All right. Once again, this is why most traders fail, because just when they think the market wants to go one direction, it switches and goes another. That's why we're always caught off guard. And why? Because we're looking at faulty techniques to listen to the market. But if we listen to the market using our translator, the PET D, we simply click it on our platform. And look how it told us in advance. We knew well in advance right here when there were consecutive red bars that we wanted to go lower. On top of that, we knew well in advance with consecutive green bars that it wanted to go higher, okay? So while the market was going lower, all we had to do was simply look for this 2-bar pattern, and potentially you could have made 32 points to the downside. And then once the market switched direction, we could have potentially made 28 points to the upside using this. Remember, this is a perfect example of just learning to want what the market wants to do. The market wanted to go lower, we're a seller. The market wanted to go higher, we're a buyer. Unfortunately, we're usually taught the opposite. Oh, this is overbought. You've got to sell it. Oh, this is oversold. You've got to buy it. That's why we lose money. Okay. Take it from me. I did that. Okay. It hurts. I know it does. And you figure like, why am I losing? I'm doing everything I'm taught. It's because we're taught traditional wisdom, faulty things that really don't have a high level of consistency. Now, I know a lot of people will say, well, Steve, okay, you could have potentially made 60 points here, but that would have meant I had to sell on the very first signal and then buy somewhere down here, and then take this very first one and then sell somewhere up here. Sure, we're just saying that you wouldn't have made 60 points. We're saying potentially you could have captured 60 points. Let's say you made only half of that, 30 points. Would you be happy with making 30 points in about 3 or 4 months? I think so. I think most of you would say, hey, yeah, 30 points in 3 or 4 months, why not? Let's say you only made a third of that. Let's say you only made 20 points. Don't you think you'd be happy with making 20 points in 3 or 4 months? Let's say you had 1,000 shares of Virgin Galactic, okay? 20 points, that's $20,000. You only have 500 shares, that's still $10,000 in 3 or 4 months. So we're not saying you're gonna make 60 points, but this is how much you have to work with, and that's a lot. Let's look at the original stock, AMEH, Apollo Medical Holdings, that we talked about in the opening slide. Okay, how could we have taken advantage of this? Looking in hindsight, this is where most traders play the victim game. They say, how come I didn't know about this one, okay? Well, in all actuality, you would have, because the Pet D was telling you. It was already coloring these bars green way back in May and June when it was going sideways. And so once they were green, you look for that 2-bar pattern. And what do we have right here? Bar number 1, bar number 2, and bar number 2 closes below the low of bar number 1. That's your buy signal. If you missed that, there was another one and another one. Had you taken the very first one, you could have potentially, coming into August, made 75 points. Once again, let's say you made half of that, all right? Let's say you made 35, 40 points. Would you be happy with 30, 40 points in a couple of months? I think so. All right, here's what traditional wisdom tells us is a sideways market. We're always taught, stay away from these markets. This is where you get whipsawed. This is where you buy at the top and then you sell at the bottom and it goes back up. So you don't want to get involved in a whipsaw market, right? This is the range markets that everyone has so much trouble with. And I agree, they're very difficult to trade. Only trouble is most of us think it's a sideways market when the market is telling us something else. Now, all we want to do is apply the Pet D. And we see here that even though we have 2 red bars, the majority of the bars are green. So this is telling us, well, market pretty much wants to go higher. Even though it may be going sideways for now, it's telling us it wants to go higher because the majority of these bars are green. So we're not going to look at any way to stay away from this. We want to look for that 2-bar pattern. And just looking at this right here, this was in mid-June. There's our buy setup right there in NTLA. So we would have had to wait for a week or so, but ultimately, you could have captured 120 points if you had stayed in, okay? Now, I know a lot of traders always say, well, Steve, what happens when news comes out? I mean, I'm always on the wrong side of news. I think there's a buy signal. It looks like the market wants to go higher, so I buy it. And then the news comes out and it goes straight down, or vice versa, all right? Well, I'm not going to tell you that any technique or any strategy we have is 100% foolproof against any news. But it's been my experience trading these things that my mentors taught me 4 decades ago, that because you're listening to the market and not outside sources that are late or just faulty, that usually the market knows in advance which direction it wants to go prior to the news event. For example, this just came out on the 23rd of July, just a couple of weeks ago, Boston Beer, which is symbol SAM. Boston Beer stock tumbles 26% after weak sales weigh on the earnings. So on the 23rd, the shares of Boston Beer SAM closed down 26% after disappointing demand for its hard seltzer dragged down the company's quarterly earnings. All right, so they have a product that didn't do well and it dragged down the earnings. All right, the company laid the blame for the disappointing quarter on the softer than expected demand for this hard seltzer product. Boston Beer owns Truly Hard Seltzer, one of the top brands in the category, but new competition and slowing growth were among the factors. So this is what hurt the brand's sales. So the news comes out, and here's what happened. The news comes out and the stock gaps down, right? So let's say you own the stock. Well, you took a big beating right there. And if you sold it, that's a big loss. Now, let's say a lot of traders, they say, well, I want to buy. That news is overdone. It's way too low. it's oversold, so I want to buy it. Well, let's say you bought on the news. Well, look what happened after that. Okay. So this is why most traders fail. They're basing their decisions off someone or something else. They're faulty decisions. What was the market telling us? Well, let's look back in hindsight. Let's apply the PET D. And going all the way back, weeks in advance of that news, what was the PET D telling us? It was telling us it wanted to go lower. Remember today's theme, want what the market wants. So why would you be a buyer, or why would you be holding on to a position if the market wanted to go lower? That's silly, right? This is why most traders fail. You're out of sync. You're not wanting what the market wants. If the market wants to go lower, you want to be a seller. You don't want to ever be a buyer if the market wants to go lower, regardless of the news. Now, let's apply that technique I taught you today, all right? 2-bar technique, where bar number 2 closes above bar number 1. If we look back here in hindsight, hey, what do we have here? Bar number 1, bar number 2. This bar closed above the high of this bar. So let's say you own the stock. Well, this could have been your structure to get out. Bar number 1, bar number 2, we closed above, and you would have sold right here and saved yourself 325 points, okay? Now, let's say you wanted to go short. Well, potentially you could have made that. And remember, this sell signal was generated nearly 2 weeks in advance of that news announcement. So remember, why do we have to focus on news? You can if you want, but let me just tell you one thing. When I first started trading on the floor of the stock exchange, I was in charge of making markets in roughly 60 stocks, okay? I had to know, according to what I've been taught, I had to know all about their earnings. I had to know all about the inner workings of the company, the CEO, what direction the company wanted to go, all right? I had to know all that stuff. And trust me, it didn't make any money for me. My mentor said, Steve, throw away all that stuff. There's no reason to look at that. If you're a long-term investor, if you're holding on to this for 10, 20 years, then sure, you want to know the inner workings of the company. But if you're trading for a couple of weeks or maybe a couple of months, there's no reason to look at any of this. The market's telling you what it wants to do, and mostly in advance. And it was a hard concept for me to really grasp. But once I grasped it, that's when my trading started to become consistent. So this is what I offer you today. If you want to look at news, and if you feel you can't cut the umbilical cord, then by all means, continue to follow it. But I'm here to tell you, and I'm living proof that it's not needed, because I'm still here today, and I have not looked at any news. I don't look at any earnings. I don't look at any jobless claims and any fundamental reports. I haven't looked at any of that in 4 decades. So make your trading a lot simpler and release all of the useless noise, what my mentors call. All right, let's real quickly look at some other markets. I know not everyone trades stocks, okay? So here's a chart, a 1-hour chart of the New Zealand Canadian dollar, all right? And this was just going back last Monday. All right, so we have a nice little upward move on an hourly chart of the New Zealand Canadian dollar, and all the bars are green, even though the last day is down. Now, what do we have here? That 2-bar pattern. So there's our buy setup right there. And in less than 2 days, you could have potentially captured 150 pips. That's $1,500 per unit. And once again, the beauty, if you missed it, there was another one there, another one there. How about E-mini traders? Any E-mini traders out there? I like to use this with the E-mini. This was on the 3rd, just last Tuesday, okay? Now the market was kind of heading lower, but all of a sudden it looked like there was some support right here. So most traders would say, hey, Steve, you know, we bottomed out, looks like we want to go higher. I'm going to be a buyer, maybe make a quick buck, all right? All right, based on what? Just based on your idea that it's oversold. And that's not a way to trade. There's no structure there. What is the market telling you? Well, once you add the PET D, it's telling you that it wants to go lower. There's only a few green bars, not enough to tell us it wants to go higher. We need 3 to 5 consecutive bars. So the market wants to go lower, and what do we have here? Bar number 1, bar number 2. Bar number 2's close is higher than bar number 1's high. So this is a sell setup. This was on the 3rd of August, just last week, on a 15-minute time frame. And in 1 hour, you could have potentially made 26 points. That's $1,300 per contract, okay? Now, I took this slide just about an hour ago before I started the presentation in Bitcoin, because I know we have some Bitcoin traders now. Now, this was coming into August. This is a daily chart of Bitcoin coming into August. Obviously, the market's been going up. We're in an uptrend, right? But maybe you went to that blog. Maybe you got scared when you saw all of a sudden the market start to fall out of bed. You say, hey, this doesn't look good. It looks like the trend is changing. It looks like we hit some resistance. So maybe I'm going to sell my Bitcoin, or maybe I'm not going to buy it the way I wanted to. Okay, and I'll forget about it and look at something else. All right. This is why most traders miss the big moves, because you're listening to faulty information, someone outside of yourself. Remember, most traders take themselves out of the game and let someone else make the decisions for them. If you had the Pet D and knew this technique, you could have made your own decision, because if we apply the Pet D, you see that all the bars are green. Therefore, we apply this 2-bar technique. What do we have? Bar number 1, bar number 2. There's a buy setup right here. That was on August 1st, last week. What do we have right here? Another one on August 2nd, and then another one on August 3rd. You could have taken any one of these last 3 bars to buy. And as we know, this past week, Bitcoin has gone straight up, 7,500 points in less than 2 weeks, okay? I know not everyone trades Bitcoin, but I'm just trying to show you how this technique can be applied to any market, any time frame. And it's not based on any fundamental news, not based on anything that you've looked at before, like support and resistance, or moving average crossovers, or volume, or traditional candlestick patterns. No, it's just based on a tool that translates what the market wants to do. Now, is every one of these setups profitable? No. I'll be the first one to tell you they don't, but with some proper money management and with some proper trading, which we teach you in our course, you can do very well trading this technique. All right, let's recap. Remember the buy setups. You want to see 2 green bars generated next to each other by the Pet D. And then green bar number 2 must close below the low of green bar number 1. For sell setups, we'll do the opposite. You want to see 2 red bars generated next to each other, be able to identify them, and then red bar number 2 closes above the high of red bar number 1. That's it. It's that trading. Remember, trading is simple. It's the trader that makes things more difficult than it has to be. Remember, the theme of the day is want what the market wants. And the best way to know what the market wants is not by, looking at old traditional trend trading tools, but by following the translator, the Pet D. So before you ask me questions, I want to ask you one. Remember, we're already in the second half of 2021. We're almost going to be halfway through August here pretty soon. Do you think this technique can help your trading for the remainder of the year? This is just one of the dozens of ways in which to trade the Pet D. Well, we have a great attendee discount for all of you attending today. We're going to offer you a great discount on the Pet D. This is our roadmap for any market. It truly is a roadmap. It translates what the market wants to do and gives you a roadmap better than anything I've seen in my 44 years of trading. But remember, the ease of use of applying this technique today, what I share with you today, comes so simply on our platform. Because of that reason, we want to also throw in 12 months absolutely free of our platform if you become a course member of the Pet D today. This is till Friday only. 12 months of the platform absolutely free. That's a full year of over 4 decades of information that I've accumulated on the floor. Now remember, you're not going to just get the Pet D and that's it. You're going to get enhanced buy sell line. This is our 4 different ways to find out what the overall trend is. This is the way to determine what the market wants to do on an overall status. The Pet D is for short-term identification of the trend, and this is for the overall trend. You can apply them together to have a more consistency in your trading. You also get a strength of trend tool. Many of you were saying, as looking at these examples, well, where would I get out? Boy, I made 120 points. Well, this tool has the ability to see if a market is running out of steam. So you can look at this and say, hey, well, I'm going to hold on to my position because this tool is not telling me any different that the market's going to change and roll over. It's a great tool. This also comes with the PTS Primo charting platform. You'll get a signal scanner. You'll get entry levels and stop placements, one-click access to these on the platform, auto-generated exit levels on the platform, along with personalized tech support. This is just a few of the things. We also have techniques, other ways to determine what the short-term trend is, pattern recognition techniques on the platform that you won't find anywhere else. Remember, this is 44 years of information that I've accumulated from the trading floor that you'll see only on our platform. You won't find this anywhere else. And you get 12 months, I should say, totally free with your membership today to the Pet D course. Now, here's one thing I want to share with you. I know a lot of you are saying, well, Steve, yeah, this seems to work good if I'm kind of day trading or looking at, small swing trading, but overall, can this really help me? Well, let's go back a while. Let's go back a year and a half, in fact. This is a chart of the spiders, the ETF that represents the S&P 500. Remember back in February, this was a year and a half ago, things were doing well. In fact, they were slowly and steadily going up the same way they are now, right? Just slowly, with a little volatility going up every day. Every time you have a downward day, the next day it's right back up. No volatility, but just slow, steady wins the race, right? And then all of a sudden this happened. That's where the news about COVID came in. This was in mid-February coming into March. It was so bad that the market, the Dow Jones, actually dropped over 10,000 points in just 1 month. So let's see how both of these techniques, the Pet D along with the technique I just shared with you today, could have helped you a year and a half ago. All right, once we apply the Pet D on our platform, we see that it gave us ample warning here. 3 red bars right there in mid to end of February, before the market really fell out of bed, that the market wanted to go lower. So this was ample warning to either get out of your positions, or if you were thinking about buying, you may want to hold off for a little bit. Now, as the market really started to cook to the downside, if you wanted to be more aggressive and short the market, what do we have here? Bar number 1, bar number 2. 2's close is higher than bar number 1's high. It's a sell signal. Think you could have done well shorting the market? If you missed that, what do we have here? Another sell signal. And if you even missed that, what do we have here? So you could have taken advantage of that 10,000 point drop in the Dow by using this, just one of these techniques, the technique I shared with you today. Okay. So that's how powerful the Pet D along with one of its techniques can really help your trading. Okay, so let's go over this. Let's break it down for our roadmap. Remember, you're going to get the Pet D tool. You're also going to get the add-on, where if you want to add it on for another platform, you can do that. But this also includes 2 continuation trading techniques, 2 pullback trading techniques, a trailing stop technique. Remember, you can apply to any market, any time frame, and it comes with educational correspondence. Okay. Now, you will be able to add this on if you'd like to apply it to TradeStation or to Metastock or to Thinkorswim or NinjaTrader. You can do that. NinjaTrader, I should say Thinkorswim is a little alteration, but you can still do it with NinjaTrader. But remember, you're not going to get all the things that are on our platform, all the things I've accumulated, like the scanner and the exits and the entries and that stuff. So it's best to just enter your orders off your current platform and to use what we give you on the PTS Primo charting platform as your educational tool. Now, the Pet D course and the application, we've raised the price because it's so popular and people continue to have success with it. So we've raised the price to $49.95. Now, if we included the full year of the platform, that's bringing the price up to $61.59. Okay, so we've really increased things. But we're going to drop this down. We're going to really drop the price down. In fact, we're going to drop it down by 35%. Limited time only. The full price is $39.95 for the Pet D and a full year of the platform. You're going to save over $2,100, closer to $22,000. Now, we realize that not everyone can come up with $39.95. So for a limited time, we're going to have payment plans available as well. For a small deposit, just a very small deposit, you can still be up and running as early as today. All right. You don't have to come up with $39.95 if you don't want to. You can just put down a small deposit and you can be up and running and a member of the course. So here's how to take advantage of this great offer. Contact Pro Trader Strategies, my sister site. They're in charge of all of the discounts and of all of the tech support and the pricing. You can email them for more information. But remember, since this is a limited time offer, I would highly suggest calling them at 310-598-6677. They have trading consultants that are on the phones right now. They would be happy to answer your questions concerning price or putting together a payment plan, or if you just have any questions about tech support or about using the add-ons, okay? Now, that link you see at the bottom is the link that will take you to the info page. Also, you can sign up online if you'd like, but it's not a live link, so you're going to have to copy and paste that or write that down, okay? So I would really strongly suggest giving ProTrader Strategies a call, and they can give you that information over the phone. Now, I promised you I would answer all your questions at the end of the presentation. So we were at the end. If you have any, please go to your chat box, type them in, and I will answer them to the best of my ability. Oh, I see someone asked a question during here. It says, hi, Steve, 2 questions here. Can you show any situation where the signal failed or there's been none at all? Unfortunately, since this is an educational presentation, I wanted to teach you what to look for. So these are static presentations, and I don't have live charts up and running. Okay, unfortunately, but I would say that if there is no signal there, then these are being generated all the time, though. So if it's not in one market, it's most likely in another one. Now, how do we find these trades on the stocks when there's a setup, or do we have to search stocks individually to find the setups? Good question. On our platform, we have a search for the PET D, so you can actually search for these. See for all the stocks that have a green and search for stocks that are in red. Now, if you want to individually, you can. Most traders have a basket of stocks that they like to trade, 10 to 20 stocks. And so what you can do is you can create your own basket of stocks, or you can search through the S&P 100. You can search through the NASDAQ, S&P 500 if you want. It's up to you. Or if you like to trade currency pairs, you can search through all of the most important currency pairs, or Bitcoin or futures. So it's up to you, but it's a very simple pattern, okay? Let's say you're looking through the NASDAQ 100 and you search for all the stocks, PET D is green. Well, the scan will bring them up in a matter of minutes, and you can just look at the charts there and you'll see in a matter of seconds if that is in place or not. Remember, we want you to be a part of the process. It's not very difficult at all. Most of this, if you look through the NASDAQ 100, will probably, after you get the hang of it, take you no more than 10 minutes. It would be that simple to follow up and look for this pattern. But that's a good question. And we have that scanner that can do it for you. Oops, quick here. Let me see if there's any other questions. Someone else is saying, you said educational correspondence. Yes, this is our most popular question. No, educational correspondence, they're asking if I can actually go there or have some type of meeting. That's more of a mentorship. Educational correspondence is very similar to that. We know because we have thousands of students in every state in every state in the United States and in over 115 countries. So unfortunately, I can't be there. I can't be at every sitting next to someone in private mentoring. So what we do is you all get my personal email address. So if you'd like to email me, you can. All you have to do is contact me whenever you like if you have a question. And really, I literally mean whenever you like. If you're in the middle of the night looking at charts and you say, hey, this doesn't make sense, you can email me. Most of the time I'm up, I'm on the West Coast, so I'm up at 3 or 4 in the morning. I'll answer emails then. I'll answer emails over the weekend. So this is not like you're contacting someone where it looks like it's educational correspondent and it's actually tech support, or it's actually a student of mine, or you're contacting an intern. You're actually contacting me. This is my personal email address, and I will answer all your questions to the best of my ability. Okay. So those are good questions. Let me see if there's any more. And I just want to make sure that all of you, yeah, I guess that's it. Well, those are good. I guess that most of you are convinced that this could really, really help you. Here's the main thing, though. In order to see this, you have to have the translator, which is the PET D. And a lot of you are saying, well, Steve, I know that question today. I mean, I know that that pattern today that you taught us. So I guess that's all I need. Well, trust me, that's not enough. You'll see that pattern. And just because you see that pattern where the close may be higher than the previous day's high, it doesn't mean that both of those bars are red, okay? Or closes below the previous day's low. It doesn't mean that both of those bars are green. So you could be buying as the market wants to go lower. You need the translator, okay? A lot of people are saying they may have gotten in late. Yes, all of our presentations are recorded, so don't worry. Each and every one of you will get a link to this recording. But the only thing I have to really stress is that if you do get the link and you watch the recording, so many of our students will sit on that and then they'll say, oh, hey, I want to watch that presentation that Steve gave last week. And then they'll watch the recording and say, God, this is really great, but I'll wait another week. And then they'll watch it again and say, okay, I'm ready to come on board with the class. Well, mostly you'll miss the great discount we're having. Remember, that's a 35% discount today, all right? All right, you're saving over $2,200 or close to $2,200. And on top of that, you can also establish a payment plan. But both of these are for a limited time only. So please, if you're really serious about this, you're going to get the link to this recording. Watch it at your own leisure. But I believe these prices are only till the end of the week, till Friday. So don't sit on it, or you'll miss that great offer, and it'll go back up $2,200, roughly up to $6,000, $6,200. Okay. Okay, good questions. I guess that brings us to the end of today's presentation. I hope you learned something today. Remember, the theme was today that the reason why most traders fail is because you don't want what the market wants. So how do we know what the market wants? By having a translator. That translator is the pet D. Now, I share with you one of the best techniques for trading with the pet D, but that's just one of them. There are literally dozens of ways to trade. We encourage all of our students to experiment, to research, and figure out different ways. This is how you become a part of the process. This is how ultimately we feel you will become a consistent trader. But you'll have more than enough information to experiment with. You'll have up to 4 different trading techniques in the course, and you'll also have a stop placement technique as well. So it's a great, great offer. Take advantage of it. And as we close here, I just want to have you take one last look at our disclaimer. And as you're looking at this, I want to thank you so much for taking time out. You didn't have to take time out of your Wednesday today. I appreciate it. Have a great day. Have a great trading week. And most especially, I look forward to all of you becoming students of mine in the Pet D course. Thank you so much. I shall see you next time. Bye-bye.